Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be talking about how the ETFs are leading the Bitcoin price into the unknown in relation to the previous 4-year cycles. I'm also going to do a bit of a fun exercise. I often get asked, when will the pi cycle lines cross over like they have done in the past 4-year cycles? So I'm going to use an unorthodox method of seeing exactly where they could cross in the very near future. And that may well give us the top of the current bull market. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. So in last week's video, I was showing you this particular headlines that the Bitcoin ETFs are purchasing more than 12.5 times the daily production of Bitcoin, which means that the daily production of Bitcoin by the Bitcoin miners of 900 was being exceeded by the ETFs by 12.5 times, i.e. just over 11,000 Bitcoins per day. And if we just round that off to 10,000 per day, we can work out how the demand for Bitcoin by the ETFs is going to lead to a supply crunch in the next 3 to 4 months. So what I want to do is to use that figure to build up some sort of a narrative to see exactly what's really going on in the background, because the current Bitcoin price is behaving completely different to what we would expect it to do at this stage of the bull market. So if we use that figure of 10,000 Bitcoins per day, and this is the figure on average that's being bought up by the ETFs since the approval on January the 11th. And there doesn't seem to be any let up in this demand. And once the BlackRock and the Fidelity start using their special mechanism that they have inbuilt, whereby 1% of their funds are then allocated to Bitcoin, that's only going to increase. But let's just assume that it's going to be 10,000 Bitcoins per day for the foreseeable future, just to work out some sort of a figure and give us an idea of what is about to happen to the Bitcoin price. So if we have 10,000 Bitcoins being taken out of circulation and put into ETFs, so this means that there is 1 million Bitcoin which are going to be taken out of circulation in 100 days, which is just over 3 months. So just after the halving, 1 million extra Bitcoins will be taken out of circulation by the ETFs. And in April, we will have the halving, which means that instead of 900 Bitcoins per day being mined by the Bitcoin miners, we will have 450. So this 10,000, instead of becoming 10 times the supply, it's going to become 20 times the supply. And we know that with the ETFs, once the Bitcoins are there, they're unlikely to be traded. So they're being taken out of circulation, which obviously means that the supply is going to fall as time goes on. And we also know that over 75% of the Bitcoins are in long-term hands, i.e. they have not been put on the exchange to sell for over 12 months. So what we're really getting is the supply going down from where we are now and the demand going up. And if you factor in there, and this demand is just from the 9 ETFs in the USA, and we know that there are other ETFs around the world like Hong Kong, Singapore, Switzerland, the UK, and more in Europe, which will get approval during 2024. So what we will be having is a massive increase in the demand at the same time as supply is going to be falling. And this will create the supply crunch. And we know what happens to the price when there is a supply crunch. The price for Bitcoin is going to go through the roof. And this is all before the retail investors who will provide the fuel to take this Bitcoin price to the top of the market. So given these conditions, the simple mathematics here is that if 1 million Bitcoins is going to be taken out of circulation within 3 months, and we have currently 20 million Bitcoins, and we also know 75% are in long-term storage. So that is 15 million. We also know that about 4 million have actually been lost. So you can see that 19 million are not available for trading at all. Out of the 20 million that have actually been mined. And we're only mining 900 currently, which will go down to 450 after the April halving. So with only 1 million left, which is being bought up by the ETFs in the USA, where is the supply going to come from for the insatiable demand that's out there? So you can see quite clearly that the price for Bitcoin has to go up substantially to make these people here, the 15 million holding onto their Bitcoins, for them to sell, the Bitcoin price has to go up substantially to tempt them to sell their Bitcoins. The only comparison to what could possibly happen with Bitcoin is the first gold ETF that we got back in 2004. And we can see that here, this is on a much lower scale than we can anticipate with Bitcoin. So this is the approval here. And you can see with the fall in the price, just like we had with Bitcoin, since then, we've had a rising market until 2009 when we had the big recession. But it's also interesting to note that we did have some dips here along the way. Like this one was around 26% and this one here was 34%. But mostly you can see that the trajectory was to the upside. So what I'm going to look at now is look at the Bitcoin price, what it could possibly do during 2024 with this background of the ETF narrative that's been playing out. If you've been watching my videos long enough, you'll know that the pi cycle indicator is the one that I've shown you consistently, which has predicted the top of each bull market since 2010. So if we use the pi cycle indicator to see exactly where we are in relation to where we were in the last cycle, it gives us a ballpark figure, and this is really an unorthodox way to find a target of when those two pi cycle lines will cross. So let me just show you. We know from previous cycles that whenever the green line, the 111 simple moving average, crosses the red line, the 350 simple moving average, wherever they've crossed in the past, in the last 5 peaks, this is where the top of that market's going to be. And currently, these two lines, as you can see, are quite far apart. And many times in the comments, people ask me, when do you think that these lines will cross? Well, let's use an unorthodox way of trying to ascertain when these two lines can possibly cross. So if we take the distance between these two lines now, so that's the distance between these two lines. And if we implant this to the previous cycle, you can see that the same distance occurred at this point in the last cycle, and that point was November 2020. And for those of you who went through the halving at that time, that is 7 months after the halving. So currently we are, in relation to the previous cycle, we are many months ahead of schedule. So while we're waiting for the halving in April, which is 2 months away, we've already reached a point where 7 months after the halving we had reached in terms of the pi cycle. And if we use the bars pattern from this precise point where the distance is exactly the same as over here and to the exact top here at 64,000, and we implant that at this point from the current price here, that gives us a ballpark figure that if the ETFs continue to be buying the Bitcoin in the same way as they have been, which has created this price action here, then by the middle of July, it could possibly reach a price of about 180,000. And I know a lot of YouTube channels predicting all sorts of prices. This is not my prediction. I'm just using the pi cycle, which is the most accurate signal for the top of the bull markets. I'm simply looking at that to see where they could cross. So based on the previous cycle, the current pi cycle, the green line crossing the red line, would possibly cross around about July this year. So really, it's a fun exercise. This is not my prediction. Before people say your prediction is wrong, I'm not predicting anything. I'm open, neutral, flexible and fluid at all times. I am just focusing on when these two lines will cross. Obviously, if the demand from the ETF starts to dry up, which possibly it can, then these lines will take a little bit further to cross over. And if they start buying even more, then these two lines will cross much earlier. So this fun exercise in an unorthodox way is really to satisfy those people out there who've been asking when these two lines will cross over as they did in the last 4 or 5 peaks. So the main thing is to just wait until these two lines cross. It could be up here at 180,000. It could be a little bit later. It could be a bit earlier. And we've just got to keep a neutral mindset. And I just want to put the idea out there, which I'm actually considering, because I keep an open and neutral view of this, is that If these two lines cross and the ETFs continue to buy up the Bitcoin, then surely this price is going to continue. So maybe this time around, these two lines, the pi cycle lines, may not be an indicator for the top of the market. And of course, only time will tell what will happen. And so far, it has always been the case that whenever the green line has crossed over the red line, that has always been the exact peaks of the previous cycles that we've had so far. So this was the last one I've just shown you there. But will it hold this time around? Because we have a completely different narrative being played out, which is leading the Bitcoin price in a completely different way into uncharted territory. I hope you found that as interesting as I did, as I looked through this over the weekend, and I thought this would be quite interesting to actually show everybody here. And everybody can make up their own mind where this price is going to the top of the bull market. And if we have a look at the wider markets, they're looking incredibly bullish at the moment. When you've got a trend this strong here with 16, 17 green candles, the trend is your friend until the end. So we have to keep expecting this to continue until the trend is telling us differently. And on the Russell 2000, I mentioned over the last couple of weeks that we're coming up to this strong neckline over here. And that while we had a bit of a fake out, we came back and we're testing it last week. And now this last week gone, we've managed to get above that one more time. So this looks like it wants to run much further. And on the dollar, we can see that last week when I showed you this gravestone doji type candle, i.e. inverse hammer, or a shooting star, whatever you want to call it, with a long wick at the top, it was getting rejected at this neckline here. So last week we had another of those candles, which is sometimes what you get where the bulls are making an attempt to take the dollar to much higher levels and they're getting exhausted at this point. And the interesting thing is that the previous candle's top, we did not close above that. We got rejected one more time. So it looks to me as though now, having made a high at this point, we made a lower high and now we made another lower high, and this looks like with a higher probability to come back lower and break these levels at these points. And if that is the case, then the markets are sure to run up much further. Okay, moving on finally to the 60-day cycle to see exactly where we are. We're coming up to the midpoint here, and as I mentioned last week, we should make a strong move into the midpoint before some sort of a correction, which could come down to this level here at around 50,500 before making a next move into the second half of this 60-day cycle. And that would give us a right translated cycle wherever this is going to be, and then a move down into the 60-day cycle low to start the new cycle up here. So as I mentioned in last week's video, if you look at where the price is going to go to, I mentioned 52 to 53,000, which is exactly where we are currently there, which was based on the resistance points of these wicks here and these wicks here and the support around here. So this was going to be an important level at 52, 53. But you can see that after that, the next level of resistance is going to be around about 59,000. So if we put the resistance line there, 59.60 is going to be the next level if we break through this 52.53. And in all probability, this is what it looks like it's going to do over the next few weeks to reach that target there. So there you have it, a slightly different video. So just want to confirm that I'm not making any predictions here, just using the pi cycle to see where they're heading in terms of the next few months based on the previous cycle. And that's giving us a target of about 180,000. Well, only time will tell whether that comes to fruition, but certainly something good to be aware of and a nice ballpark figure to keep in your mind. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.